Hey guys, welcome to a new video. So NAV erosion or NAV decay, it's a hot and controversial topic in the high yield ETF space. I feel like it's the thing that gets talked about the most. People are always complaining about NAV erosion, NAV decay, especially within the YIELDMAX funds, but it also happens across the other companies and other ETFs as well, depending on what you're buying into. So in this video, I'm going to go through 8 ETFs that have zero NAV erosion, and ones that I really like and I think are good plays at the moment. So that's what we're going to talk about. Before we get into it, of course, we have the disclaimer. This video is not financial advice. This channel is purely based on my thoughts as I navigate my own personal investment journey. Please, 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 always do your own research. So before we get into it, there's some different ways that we can talk about NAV erosion. There's some different definitions of what people think NAV erosion is. It's obviously very controversial. So I'm going to try and keep things really simple and I'm choosing ETFs. So these 8 ETFs that basically since inception are either have the same NAV or higher or in positive NAV. Their share price is either the same as it was when they were launched or it's higher in positive NAV, I guess, if you like, positive share price. So very kind of simple way of doing it. That way, it's not tanking 20% or 30%. The NAV isn't getting eroded away massively. So these ETFs have either, a net like a zero, they haven't eroded away, or they haven't got positive share price, or they're in big positive share price. And that we'll talk about as we get into it. So I'm going to just go through them all pretty quickly because there's 8 of them. And then at the end, I'm going to talk about the price change, what the NAV's doing, and also total return. So you can kind of compare them quite effectively. So what's the first one? It's a very popular one. It's one of my bigger holdings, and it's HOOW, Robinhood, the Roundhill weekly ETF for Robinhood. It's a leverage play, so it's 120%. You've got to be a little bit careful with it. You've got to get in at the right times, but it's still in positive share price from when it launched, and it also gives good distributions. Current distribution rate of 68%. It obviously has that 120% exposure or leverage, and it's a great play. I'm very bullish on the Robinhood stock going into the next 6 months, year. So love it. Love Who. All right, next one is GOO, from Who to GOO. Google has had a cracking year. It's been doing some great things recently with its in the AI space. Gemini, it's just launched Gemini, its latest version 3.0, I think it is, and it's getting some rave reviews. The share price has been doing really well this year, and for good reason. It's a big Mag 7 stock, and it just continues to just smash it. Again, same structure and strategy for Who, because it's a Roundhill weekly pay ETF. So it's leveraged, corresponding to 1.2 times the underlying. So you've got that 120% exposure. So you've got to be a little bit careful with that leverage. You can't buy at the top. You got to try and buy the dips or buy at the bottom if you can, but still a great ETF. So that's number 2. Number 3, these aren't in order, by the way. I'm just going through them, and then we'll talk about how they perform and their share price and the NAV erosion and how they compare against each other in terms of total returns at the end. But number 3, NVII from Rex. I recently did a Rex versus Roundhill video, which I think would be worth checking out if you're considering some of the Rex ETFs, because I think Rex is probably my favorite strategy. It doesn't have that leverage on the downside that Roundhill does. So if if Robinhood goes down 10%, then HOOW goes down 12%. That doesn't happen with the Rex ones. They go down 10% in line with underlying, or maybe a touch more, because their leverage they are leveraged, but it kind of fluctuates. And I feel like their downside is much, much better, much more protection than the Roundhill ones. So I feel like it's a safer play. It's a kind of a mesh or merging between the Roundhill weekly pay ETFs and the YIELDMAX ETFs. And I love the strategy. It's got good upside, but its downside isn't as brutal as the Roundhill ETFs. So NVII, I actually just rotated. I sold my whole NVIDIA position, NVDY, that's my YIELDMAX NVIDIA play, and put it all into NVII in the recent dip where NVIDIA dipped. So still bullish on NVIDIA, and I think this is a much ETF than the NVIDIA ETF from YIELDMAX. It's got a lot more upside potential, and that's why I wanted to rotate into it. So this is the third one. The Rex ones, they have half uncapped upside potential. So uncapped, and it's half weekly income. So I just think it's really nice balanced growth and income strategy, kind of like that merge, that blend between YIELDMAX and ROUNDHILL. Now, next, TSII, same strategy from Rex, but the Tesla ETF has been doing very well. Let's just go back to, people want to know the distributions. And Rex historically hasn't had the best, but considering it's been doing really well, 105% distribution rate for NVII, Tesla 78%, really good distribution rates, but still the NAV is doing well. The share price is staying consistent. There's not a lot of NAV erosion. So Tesla been doing pretty well recently. Obviously, everything's been dipping a bit, but it's still in that share, in the green share price, if you like, that NAV. All right, Chippy, I talked about this in one of my recent videos. It's a semiconductor basket ETF from YIELDMAX. For me, it's probably YIELDMAX's best ETF. It's very consistent. Yes, it has capped upside, but its basket of semiconductor stocks, you'll be able to see them down here: Broadcom, NVIDIA, Micron. These are great companies, great underlyings, and it doesn't smash the distribution. It keeps it at around 40-45%, which means it's able to recover that NAV, and that's why it does well. And I think that's the sweet spot. I think YIELDMAX's problem is that they aim for such high distributions as that's why people love them, the 80, 90, 100%, but then really struggles to recover from a NAV point of view. But anyway, Chippy, I've got into it recently. I think it's a great ETF. I think YIELDMAX is probably best. So yeah, another good option. So next one, TDAC. Now this is one that people probably haven't heard of as much. It's from Tap Alpha, who I hadn't heard of. There seems to be so many new players in the high yield space. And these guys had TSII, which is the S&P version, or the S&P income fund from Tap Alpha, and now they've recently brought out a couple of months ago TDAC, which is the NASDAQ 100 growth and daily income ETF. So it's got exposure to the NASDAQ 100, so it's not going to have crazy income, it's not going to have crazy growth, but it's going to be very steady, and it uses zero DTE. So like by writing call, so it's maximized time decay. By writing call options each trading day that expire the same day, TDAC seeks to capitalize on the rapid time decay inherent to zero DTE option positions. So it's growth, it's income generation, it's exposure to the NASDAQ, and it's been doing very well since launch. If you compare it to the other NASDAQ 100 high income ETFs, of which there are a lot, this and KQQQ, which actually isn't NASDAQ 100, but those two are doing the best. And that's a video I could do in the coming weeks if people would be interested in a comparison between all the NASDAQ 100 ETFs, because there's a lot and it's quite interesting to see the results. So if you want to see that, please let me know in the comments. So, but yeah, TDAC. I've been trying to get into it, but I missed the dip in the last week, and it's been going up quite a bit, and I keep missing it. And now I'm a bit hesitant to get in as it's recovered quite a bit, but still a great ETF. MAGY. People love MAGY. This is a ROUNDHILL ETF. It's a covered call standard ETF from ROUNDHILL based on the Magnificent Seven. Most people know what the Mag 7 stocks are. And I think anything Mag 7 related. I actually really like YMAG from YIELDMAX, but MAGY is more consistent. It's got a much better NAV position, if you like. It pays a much lower distribution, but its NAV then stays a lot more stable than YMAG, for instance. So it's probably, if you're looking to have a stable NAV, then MAGY would be your go-to from a Mag 7 point of view. Great ETF. And then last up, I think this is number 8, is blocks. Now, lots of people talking about blocks, and Bitcoin and crypto has been doing terribly actually in the last month or so. It's not been doing well at all. And for this to still be in the green in terms of share price, in terms of its NAV position, is amazing, because Ethereum and Bitcoin have been tanking. So, and this is what it has exposure to: Bitcoin and Ethereum. It will show you what's the distribution rate. Does it say on here? 36%. So again, it's not going for that massive distribution, but still, I think that's a pretty good sweet spot. 36. I think anywhere from 30 to 60, 70% is a really good sweet spot, so that you can kind of recover that NAV. And these are its holdings. So Ethereum, I hold Ethereum actually in my growth portfolio, very bullish on that. But it's down a lot at the moment. So I think this whole ETF blocks will do very well in the coming months. Not crystal ball, not financial advice, but I think crypto isn't going into a bear market. I think a lot of liquidity is coming back into the market, and I think it's going to have a very good year in 2026. But we'll see. So yeah, these are the underlying. So it's not all crypto. You see NVIDIA in here. You see some tech stuff in here, but Coinbase, HOOW, Iron. Lots of people are so bullish on that stock. Worth looking into if you're looking to get in some growth stock. Excuse me. But yeah, blocks, great ETF in the crypto space. So that's all 8 of them. Let's compare them. What's doing the best? Now, this is all 8 from inception. Okay, so and this is price change. This isn't total return. So this is literally just NAV. What's their share price been doing? Where do they sit in terms of their net asset value, their NAV? So if we look here, number 1 is GOO. That's up 50% just in the share price alone. So this is without distributions, just share price. GOO is acting like a growth ETF. It's up 50% over the last, whatever it is, year or something. Not even a year, because it didn't launch until middle of the year. So it's just up massively, and that's just on share price. Number 2, Chippy. As I said, I think it's the best YIELDMAX ETF, and on share price alone, it's up 21%. Next, NVII, the REX NVIDIA ETF. 4th, HOOW. That's Robinhood one, up 13%. TSII up 6%. TDAC up almost 5%. That's the NASDAQ 100 one. MAGY up 3.39%, and blocks up 2.3%. So those are, the thing is, the last 3 weeks has been pretty brutal. So blocks has had it's gone down a lot. MAGY's gone down a lot. Even the NASDAQ 100 has gone down a lot. So the things that have launched more recently are not doing as well. This isn't really a fair comparison, by the way, because we're going from all time. So some of these launched are much more recently, like TDAC is only a couple of months old. So for it to be only up 4.9% is because it's only 2 months old. It hasn't had a lot of time in the market to appreciate. Whereas Chippy is the longest one here, and that's had more than a year to. Is this saying all here? Yeah, this is all. Chippy has had more than 6 months, more than the rest of them, to get to that 21.9%. So this isn't a fair comparison, but I just want to show you that this is the NAV, this is the share price, what they're doing. They're all positive. They're all in the green in terms of their share price. So there is no NAV erosion. These are all in the green just from share price alone. But of course, we get into these for the income. We're in these because they're high yield ETFs. We want the distributions, whether we use them for our families and for paying the bills or whatever we use that for, or to reinvest into the ETFs themselves. So what does that look like? We've got to look at total returns. If we go up here, we go to total return percentage. We're on all. Again, not a fair comparison because it's in different time spans. You can't use this as a fair comparison at all because they all launched at different times. But from inception, this is all from when they launched. GOO, including distributions, up 81%. HOOW up 71%, Chippy up 57%, NVII 42%, TSII 36%, MAGY 24%, blocks 18%, and TDAC, it's only a couple of months old, but up 7.9%. And this is even better considering the dip that we've had. So this is total returns, this is share price, as well as distributions, and this is also including that dip that we've had. If we were to go, put this up here, just before beginning of November, before all this dip happened, this big sell-off happened, then who was actually up? Who would be the winner? That was up 100%. Chippy up 62%. NVII, like the returns are much better if we go back just a few weeks ago. Whereas now we're on the recovery, but down here, it wasn't so good. We're recovering now, but up here and up here, you know, who was up 115% at one point. Just incredible returns considering it's not even that old an ETF. But anyway, that kind of covers off my 8 ETFs that have zero NAV erosion, that also have very good total return. If you look at this, again, not an accurate comparison because they were launched at different times, but something to bear in mind, and maybe some ETFs here to consider getting into if NAV erosion is concerning to you as it is to me. And I do look at these as some of the best ETFs in the high yield space. That's why I've gone from NVII into NVII. I'm bullish on HOOW. Blocks I don't have. I'm in LFGY, but probably in hindsight should have rotated from LFGY into blocks. Chippy, I've launched a position. TSII, I'm waiting for a bigger dip on Tesla. GOO, I'm waiting for Google's just been flying. So for me, the dip hasn't been big enough. It's at all-time highs, and it's just not been dipping hard enough for an entry. Just from my perspective, MAGY is great, but I actually like investing in YMAG and then hedging that with MAGs. MAGs is the ROUNDHILL MAG 7 ETF. So if you just it's like a growth ETF. So if you hedge MAGs with YMAG, I feel like the total return's better. That's just an interesting little insight from my part, and that's what I like to do in terms of my strategy. But if you just want a safer zero NAV erosion MAG 7 exposure ETF, MAGY is a great one. And TDAC, that NASDAQ 100, it's a newer one, but it's T-SPY, it's S&P 500 equivalent. It's been doing really well, and I think TDAC is going to do great things, and it'll be a long-term play, right? It's NASDAQ 100. It's always going to do well. Just buy the dips, and it's going to have great returns. But like I said, if you want me to do a NASDAQ 100 video comparing all the NASDAQ 100 high yield ETFs, happy to do that. Let me know in the comments, and I will leave it there for now. Thanks for listening, and have a good one. Cheers, guys.